Hello, Phil here from Lucrum Trading Systems, and today we are going to build ourselves an automated trading system utilizing both the Ruby system and SharkIndicators BloodHound and Blackbird software. So first we're going to open up a chart as we have here. This is the chart that we want to build our system for. It is a 10-minute E-mini, and this is a continuous contract chart for testing purposes. Next we are going to load up the Ruby system under its default parameter settings and BloodHound. So first we want to think about what components of the Ruby system we want to use in our trading system. What is the entry logic and what is the exit logic? For this, let's keep it simple and say we want to trade every single time that there is a trade trigger signal, green for long and red for short. And that is as simple as going into BloodHound. Going to open up the Ruby template, and this template is provided and has all of the different outputs accessible for BloodHound. And here we have our entry logic. So I already have it built, but I'll work backwards and explain what everything is doing. So let's refresh the chart quick to get BloodHound active. And in our logic, here we have the entry trade signals, and that is going into the results. So this is going to basically say every single time a trade trigger signal is painted, it will trigger a signal for entry. But we want to do more than that. We want to eliminate some of the false signals that can be generated with Ruby and use different tactics to get the signals that make sense for our system. So with that, we're going to use two different indicators to filter out some of the trades that don't seem to work well or don't fit our trading objectives. So with that, we are going to use the ATR, and the ATR is basically going to say that the signal has to coincide with the ATR direction. So if we have a long signal but the ATR is above price, it is not going to trigger, and the inverse is if there's a short signal with the ATR above price or below price, that'll also not signal. So here you can see a couple that were eliminated. We have a short signal here and a long signal here that was still, this was had prices below the ATR, and this was prices above the ATR, so the inverse signals are eliminated. And the next filter we are going to use is a simple EMA slope. The EMA slope is going to use a 100-period moving average, and that is going to identify whether the general consensus of price is trending upwards or downwards, and it will make sure that if there are counter-correlating signals to that direction, they will not be painted. So if we have the EMA trending upwards, it's going to say, hey, let's not take any short trades. If we have the EMA trending downwards, it is not going to take any long trades. So that will filter out a few more. This signal here had been filtered because the EMA was trending slightly up, but it was enough to filter and trigger that. And there you have it. That is the simplicity of our entry logic. And next, let's take a look at our exit logic. So again, we'll work backwards and explain exactly what is going on. The settings for the exit are a little bit different than the entry. I have bumped up the trend sensitivity from 18 to 30, and the reason for this is because once you're in a trade, you don't want the system to prematurely exit because there's it didn't quite move as highly as you wanted, didn't quite go in the direction, or there might be small deviations in price that could trigger transitionary bars, and we don't want that. So we want to bump that up slightly to phase some of those early falsehoods out. And we want to take a look back function node, and we're going to look back 2 periods, and this is going to say if there are 2 or more consecutive gray bars, we want to trigger a signal. Then next we want to use the bar direction, up or down, to also have an exit condition. So if you're in a long trade in the green bars, as soon as a magenta bar forms, it will exit the trade, and vice versa for the other direction. Now this exit logic is very basic for one, but it performs a very solid function in that for there to be a transition in direction and price, it will have to go through those transitionary gray bars, or if it's drastic enough, it'll go directly to the inverse bar direction. And either of these conditions can be met to trigger this. This is not a and, this is just an or logic node. So either 2 consecutive gray bars or more, or the bar direction reversal will trigger the signals. So that is it. That is our entry and our exit conditions. Let's go ahead and try it out. So we're going to go and do a strategy analyzer, and we are going to backtest on the E-mini continuous contract. Again, this is solely for testing purposes. We're going to select Blackbird. We are going to use the Blackbird settings to open up the Blackbird's window. So let's just start over and see how easy it is to get this set up. So we're going to go into the signal. We want to have a BloodHound signal because that's where we created them. And we are going to do BloodHound Ruby system. The template file will be selected. This is the most recent one that we used. It has our logic already set up. And we have our entry signal logic, which is our entry signal template. And our exit will be the reversal exit logic. Everything else is fine. The threshold is 0.8 for long and short. And there you have it. And now we're not going to set any profit targets or stop losses because they are essentially built into the exit conditions of the system. And we're also not going to go into the more advanced features of Blackbird that will give you total account management with risk and executions of your trades. We'll save that for another day. We're going to keep this one very simple with trade trigger signals from BloodHound with market entries. So we're going to go ahead and save that and backtest it. So everything here is fine. Again, we're going to test on the 10-minute. We're going to go for the past 4 months. We're going to include a commission. I think it's a good sense to have a little bit of leeway in your systems to give a true sense of what it might have performed like. Commissions is a good way to do it simply because slippage is tough to really determine whether you're going to have positive or negative slippage. Exit on close is false. Everything else is fine. And we're going to go ahead and run this backtest. Give it a couple seconds to complete here. Then here is the results of this system. So swap it to currency quick. These are for single contract system. So this is basically saying that each of these trades is for one contract. Looks like preliminary results are pretty solid. Decent net profit. Percent profitable is about 50%, which is fine because we are looking at the size of the average winning versus the size of the average losing trade, which is nearing 2-0, and at a 50%, that is perfectly fine. Total number of trades, 119, which equates to about 1 trade per day, because I believe there's roughly 120 days within this simulation. Moving on to the chart, we can look at exactly how the entry signal is working by selecting the entry signal logic there in the drop down. And so we had a signal generate here, and the trade is going to execute at the open of the very next bar. So we can just walk back and see how it did. You know, obviously there's going to be some losers. No system's going to be perfect. Here, it gave back some, and you know, as much as it sucks to have losing trades in a system like this, it is designed to. It is perfectly fine because we're looking at these big winners here, big winners there, big winners there, big winners there. You know, that's sort of the name of the game for a system like this. Again, you can look at the exit conditions there, but that's basically it. The cumulative profit graph here looks pretty solid. You know, there's going to be some levels of drawdown, but again, that's expected of any system that's ever in existence. Now we're just going to take a quick look at how easy it is to make iterations and changes to the system directly in the strategy analyzer going through Blackbird. So here we have our system here. We can go into our template file, go into our logic, and here we can make any assessments and changes that we see fit. We can go into the parameter settings within Ruby itself. You know, you can change some of the key parameters, save it, test it, and see how it fared. So there you have it. There is a quick demonstration of how to create an automated trading system utilizing Ruby in SharkIndicators BloodHound and Blackbird software. Hope you enjoyed it. Thanks for watching. If you have any questions, please feel free to contact me and visit lucrumtradingsystems.com. Thanks for watching. Until next time.